Welcome back to this special broadcast. We continue to decode the impact of the additional fee of $100,000 on H-1B visas. Joining me now is Sandip Agarwal, Fund Manager, Sowilo Investment Managers, and Bhavin Shah, Founder, CIO and CEO at Samiksha Capital. Gentlemen, thank you very much for joining in. Sandip, if I may just start this discussion with you, this is the most dramatic shakeup of H-1B visa that at least I have seen, since I started covering. But first, give us the numbers on how this impacts Indian IT. Have you done any number crunching?
Yeah, hi, good afternoon, and thanks for having me on the show. So, all the numbers are there in USCIS website, right? So you have also already reflected, and the amount has also been very clearly told by the Commerce Secretary. It is 100,000 per year. Now, I don't know whether there is some confusion in that because H1B is for 3 years, extendable by another 3 years. And the cost, as far as I understand, and I'm tracking this industry for now 25 years, it varies from $1,700, $1,800 to it can go up to even 15, 16, sometimes $20,000. Now, this cost which they are talking about is above that. So if we take everything what is said on the face value of it, the top 5 Indian IT companies has $80 billion of revenue. And if you see the last year FY24 visas, it was 16,000. I think it would have come down to now 10,000 this year. So 10,000 visas into 100,000 is like $1 billion impact. 20% EBIT margin on an average on 80 billion is 16 billion. So 1 billion by 16 billion is 6-7% impact broadly. So that is the way it works. So quite a significant impact, to be honest. And bigger challenge is that, water and people find their ways. So I think, more and more outsourcing will happen over a period of time. And COVID has taught us everything, that how work can be done from remote. And secondly, I think a lot of GCCs will also come up. And third, I think Canada will be a biggest beneficiary because a lot of companies will start sending people to Canada to execute. And they can, if required, go for day trip, and also they can solve. So I think there is a temporary problem. Impact is huge in an industry where growth is not there. So yes, the industry will go out of level for the investors for some time. But I think that except margin, execution will happen, as mentioned clearly in the previous by the previous speaker from Hexaware CFO. It is very clear there is no other source of executing this work today from anywhere else in the world.
So Sandeep, if you have to summarize very simply, it will be margin negative in the near term, but if over the medium and long term, as business models get, talent models get realigned and we see increased outsourcing, will it be positive for margins? We reduce sending people to H-1B visa, get more work done here. Won't that be margin accretive?
Yeah, 100% it will be accretive, because if you see already on the onshore, with people we send, we don't make much margins. The margins are very, very low because we have to abide by the minimum wages and everything. So it is just that we need to give client comfort that we have to send people, and some projects are so complex that you need 1 or 2% from there to coordinate because time zones are different. We are doing it, but given a choice, no one would like to send people. There is huge cost in sending. We make hardly any margins when we send people abroad, except few projects where you can charge very high initially during transition phase. But steady state projects, we make very low margin in the onshore. We make most of the margin from India only.
Sandeep, just to get back to the point that you were earlier making, Indian IT companies are struggling for growth. There's very limited investor interest. Now, how do you expect, both the domestic and foreign investors to react to this change? How long will the pain last when it comes to a stock price performance?
So, Rima, it is a very structural thing. If you see before 2019, and we have seen that for last 25 years now. Before 2019, every big transition, technology, there was always a transition from one technology to another. So it used to generally create a gap for the timing till your workforce is trained in the new technology or transition, and then you again get more and more revenues and everything. Every time the large caps were the beneficiaries, biggest beneficiaries, followed by mid and small. After 2019, we have seen when COVID came, 2021-22, we have seen the mid caps were the biggest beneficiary, because the deals in which they were never able to participate because they were 500 million, 1 billion, and sizes of those, these guys were not able to participate. But post-COVID, the deal sizes became very small and they were the biggest beneficiary. You saw all these stocks becoming 10x. I think after AI, I think the biggest beneficiaries will be the small caps, because the size of contracts are further falling to 1 million, 2 million. $500,000 and all, which these numbers, when they stack up, it will take 4 or 5 years to make a meaningful impact to the large caps and to bring growth back to them. So my call is that, the large caps will see 4 or 5% growth for elongated period of time, maybe 3 to 4 years. The mid cap will see 10, 12%, 15% growth for 3, 4 years, and they are at 6, 7 times PEG ratios. The small caps, which are not very expensive on the PEG ratio, they can actually see a much higher growth. That is the way I see the industry shaping up. In my view, I am very clear that outsourcing, there is no option. You have to outsource to India only, because even if you see the engineering software engineer cost in any other geography in the world, it is today higher than what the price that we are charging. So it is not replaceable. So work will happen from India for sure. The mode of execution will change. As I said, the numbers will further come down. In last 10 years, numbers have come down drastically on the H1Bs. They will further come down, and many people will not send to US. They will start sending some people nearshore to Canada, Mexico. I think Canada will be the biggest beneficiary of this in that sense, and rest of the things will get offshore. In revenue growth can come down a little bit because the billing rate of onshore is higher than offshore, but margins will go up because there was no margins any which was on the onsite. It was always the offsite which was making margins. So margins will go up on a lower revenue base. So you will see margin improvement, and you will see lower revenue growth for some time. But because the large caps cannot do much, I think the interest in the industry will go down from the investor, both for FIs and domestic.
We're in conversation with Sandip and Bhavin. Sandip, we were just discussing with Bhavin. Are mid-cap and small-cap IT companies at risk of losing competitiveness in securing US projects because of limited on-site deployment, if it comes to that?
So, Rima, I am telling you with my own experience of running a tech company way back in 2008 to 2010, and we were doing work on AI and ML. And I can tell you that, there is no need to go on-site, honestly, except, the start in the beginning when you have to, line up things. And with advent of so much of technology available with Zoom, I will tell you, if you see capital goods companies in India, last 2 years, they are installing machines coming in from China many times through Zoom. So installing machine, I believe, through Zoom is always more difficult than doing software. I don't believe that, it is so difficult. Yes, there will be short-term problem, as Bhavin also mentioned. We don't know what kind of problem these companies will face and all that. But I don't think any which ways, there is a challenge in the long-term competitiveness or the offering. I think honestly that it is a very, very big boost for most of the small and mid-sized companies, because they always try to explain client that this work can be easily done from India, but always client wanted comfort of some people being out in the whole project to be there at their site for comfort. I think now it will be very easy to negotiate that, because remember that we are only calculating the cost of these visas. There is so much of other cost to get these visas, because there has to be a huge legal team here, and in US there has to be so much of other fixed costs which are always there to secure this and enable this. That is a big challenge. You have to arrange hotels, you have to arrange guest houses, you have to arrange so much of logistics and all. All these things will slowly go down as you shift more and more H1B to offshore. I think in long term it will be very helpful, and I honestly don't think there is much execution challenge from India. You can probably bring down the H1B substantially from current number also.
Okay, we're out of time. Gentlemen, thank you very much for joining in, both Bhavin and Sandip. We didn't get a chance to discuss, and why